Going to bring you an update on the business news for you now on the programme. For that, I'm joined here in the studio by Brian Quint from the France 24 Business Desk. Brian has started today with a look at rising inflation in Europe. The latest data has just landed here in France. You've been analysing it for us, Brian.
It has indeed, Stuart. Inflation rose a bit in France. It will probably not surprise you to know during May, with consumer prices at 5.8% above their level from 1 year ago. That is up from April's figure of 5.4%, which was already a nearly 4-decade high. Plenty of other European countries have already reported their monthly inflation figures as well, most also hitting their highest levels in decades. May saw consumer prices in Germany reach 8% higher than 1 year earlier. That's a level not seen since the 1970s oil crisis. Energy prices in the Federal Republic up 38% annually, food up 11%. In Spain, the headline figure even higher at 8.7%. That's down slightly from a record of near 10% in March, still not at levels not seen since 1985. Belgium hitting nearly 9% inflation. France's 5.8% then remaining below the Eurozone average. That's thanks in part to a government cap on home energy price hikes that capped at 4% this year. Finance Minister Bruno Le Maire, though, says that rising prices are likely here to stay for a while. Here's Le Maire.
Due to the reorganisation of value chains, the energy transition, and the decarbonising of our economy, we will be entering a new period where inflation will not be as low as it has been in recent years. We will need to define an economic strategy, and we have begun this process to protect our citizens and shield them from the consequences.
Well, that inflation is being driven largely by skyrocketing food and fuel prices as the war in Ukraine disrupts both energy and agricultural markets. Plenty of products, though, have been largely spared from the supply chain difficulties and exposure to energy prices. For French supermarket chains, those products represent an opportunity for promotional discounts as customers seek to offset the effects of inflation by bargain hunting. Joe Keane and our colleagues at France Télévisions take a closer look.
French consumers have been feeling the pinch. They are now being offered reductions on food products as well as detergent at lower prices. In this supermarket, customers are looking closely at promotions to fight the effects of high inflation.
I'm looking at the promos. With everything going up, we're trying to do what we can.
Food, cleaning products, hygiene products, a bit of everything.
With the rise in prices, the share of promo items in the trolleys of consumers has gone up, a consequence of concerns over the cost of living. This specialist in retail marketing says special offers have been increasing in recent weeks.
All
the major supermarkets today are trying to improve their market share on prices and promotions because they know it's that which will boost their overall market shares.
Traditionally, these special offers have been reserved for the most expensive products, such as alcohol and electronic devices. But the strategy of supermarkets is changing. Many are applying discounts on food products or fuel.
If we really want the discounts to be an economic incentive for the French people, we need to look to create a balance between non-essential items and food products. That should help customers who feel conflicted.
3 consumers in 4 now say they are ready to change their spending habits in the wake of these promotions.
Time now for a check on the day's trading action. The EU's latest agreement to ban some 90% of Russian oil imports by the end of the year, already sending crude prices higher on the commodities markets. Brent crude at a 2-month high, trading at nearly $124 per barrel, with WTI above $119 a barrel. On the stock markets, European indexes opening mostly lower as investors take in that latest inflation data. The CAC 40 here in Paris down around 0.33%. Over on the Asian markets, gains on Chinese indexes as factory activity there contracted in May at a slower rate than April. Investors taking some encouragement as the business capital of Shanghai prepares to end a 2-month COVID lockdown. And finally, for business, the fashion industry has long been one of the world's top polluters, responsible for an estimated 10% of all greenhouse gas emissions. Brands are facing increasing pressure from consumers to reduce their footprints. But a new report from a major industry publication says little progress is being made. The Business of Fashion's 2022 Sustainability Index evaluated fashion's 30 largest public companies on 6 topics, including emissions, waste, and workers' rights. Out of a possible 100 points for achieving the goals of the Paris Climate Accords, not one company broke the 50-point mark. Newer streetwear and high street fast fashion companies scored the worst. The report says alternative business models are necessary, especially for reducing waste. The industry typically overproduces by nearly 40% each season. A lot of clothes going straight to the landfill after a couple of weeks.
That's not great, is it?
And to the ocean.
We should just stop wearing them. That would solve the problem, wouldn't it?